Welcome back to the nationally syndicated Price of Business show. I'm your host, Kevin Price, talking to you about you and your business. I want to mention in our newsletter, it's called Read Instead. It is the best of the Price of Business digital network. You can find it at priceofbusiness.com. Right there on the right-hand side, you'll see the banner. There's no cost for it. And it's one newsletter once a week. We don't bore you with spam. It includes my interviews with New York Times bestselling authors, billionaires, Nobel Prize winners, some of the biggest names in business and media. And, it's been a long-time favorite on the show, and it's a long-time favorite of mine. Make sure you check that out. Someone who's appeared often on that is my guest this segment, Chris Kidd. We call him the money guy here, the money man here on the Price of Business show. And the reason why is really interesting experience with money growing up, starting with the family of origin, and really the challenges that came with middle-class thinking around money that he and I can totally relate to. We have a lot of war stories in that area. And then transforming his life through the power of mentorship. And by the way, it doesn't matter how old you are. Even at my age, I still have mentors. You need mentors in order to navigate these things. And so, and I believe that listeners of this show, when they listen to Chris Kidd, it's like having a mentor talking to them. So, Chris, always glad to have you on the show. A little bit more about what you do in helping people with money. And your website is chriskidd, KIDD.com.
Well, yeah, what I do is basically try to help people, one, think differently about money, learn to magnify their efforts, and kind of one thing we're going to talk about today is speed up the velocity of their money working for them. I deal with the investment side, but I don't manage people's money. I teach them how to get more out of the people that are managing their money and how to make better investment decisions, how to manage their personal finances better. And if they're inclined to start their own business or grow a business, I work with people in that area as well. I really enjoy working with athletes and people who come from a background like that, because that's where I came from. I'm the son of a high school coach. He coached me from the day I was walking all the way through until I graduated high school. And he did the same with my brother. So, I can relate money and the sports world very, very easily together.
Yeah, they're really intertwined in many respects. And so, both require a lot of self-discipline. Both require a lot of delayed gratification. And so a lot of those principles, when you're dealing with athletes, they already get it. They just got to translate it to money.
Yeah, and it's not only professional athletes now, it's even college players. We did a segment about that, several years back when they were talking about being able to pay college players and things. And now some of the money that some of the top college players are able to get, I've heard is just like ridiculous, like for a college kid, north of 7 figures.
Right. Yeah. Thanks to NFTs and other things in the crypto world is mind-boggling when you think about it. So let's talk about this velocity of money. Of course, my education was in economic history. So when I hear the velocity of money, that's what America suffers from right now, right? That's too much money chasing too few goods, which is inflation. But we're talking something very different here. We're talking about it on an individual level, and most people have the throttle way tighter than it should be in the wrong direction.
Yes, and with interest rates rising, it's actually it's like they're pumping the brakes. So if people know their only way of making income is through traditional, I'm going to go to work, I'm going to trade my hours for dollars, and, I'm going to save what I can, that's a very slow way of building wealth. And with the interest rates being pushed up right now, and I don't know how high they're going to end up going, but that slows stuff down because it handicaps what people are able to do. I guess the main mindset that a lot of the middle class have is, I'm going to buy a house, and then I'm going to save up for a few years, and then I'm going to go buy a bigger house, and then I'll sell the other one, And then, a few years later, I'll sell this one and then roll that into a bigger house. And that's their traditional thinking of building wealth, and then invest in their 401k, which I'm not a big fan of because that's a slower vehicle. Investing in stocks, and we'll get into some of this stuff in a little bit. But yeah, the Fed and the government, obviously they have to slow stuff down because inflation's been ridiculous. But the traditional ways of thinking are going to be extra slow right now.
Yeah, absolutely. And, the reality is, part of the problem is that a lot of people with traditional jobs, just describing middle-class wealth accumulation is really what I call what you described. The thing about it is that 40 hours a week minimum, depending on what they do and who they work for, is sucked up with the opportunity cost of just trying to make a living. And so being nimble and figuring out alternative ways of making money and recognizing, frankly, you could multiply what you're making working for someone else, just doing things on your own really quite quickly if you allowed yourself to do that. That is a different form of thinking.
Yes. Yeah. There's three ways to multiply or to grow your money a lot faster. And that's, one is through building a business. To me, that's the fastest way to go from zero to $1 million plus. Just to come up, you can basically take an idea and within a few years be a millionaire, and a handful of years more, as we've seen, become a billionaire. And then there's, the investment world, which is, real estate, stock market, whatever you want to get into. But I kind of break those into two separate types of investments. There's trades, which are quicker, short-term stuff, obviously, and then there's investments, which are long-term places to put your money. And both of those can create a lot of wealth, and they can do it quickly. A lot of times trades are things that you want to do to build up some good reserves to put into your investments. That's kind of my strategy. And a lot of times if anybody's ever played the game Cash Flow from Robert Kiyosaki, the game he created, it's my favorite game to play. But he's got the big deals and the small deals, and a lot of times, depending on which character you get, like if you get the janitor, he's not going to be able to take advantage of the big deals right off the bat. He has to find a way to store up something to get into a big deal. So if you get like the doctor or something like that on the game, then you might be able to get into a big deal earlier. So and that's more the investment type vehicles versus the trades. But go ahead.
Mm-hmm. Yeah, absolutely. Well, thank you. Yeah, absolutely. You very much nailed it. Robert Kiyosaki's been on my show probably about a dozen times, author of Rich Dad, Poor Dad, the biggest selling financial book of all time. And, you nailed it. You just captured the essence of Robert's philosophy. And, this is where it's all about. It really does requiring thinking differently and really challenging. It really requires putting fear in check. You and I both have had an interest in Stoicism, and Stoicism is all about accepting your reality and thriving no matter what that is. But a big part of that, centerpiece of that, is putting fear in its place. That's the main reason why people don't succeed. I think you agree with that too, is fear. And I look at the lives of people like John D. Rockefeller. John D. Rockefeller, in fact, wrote a lot like a Stoic and spoke a lot like a Stoic and had this incredible ability not to be driven by his circumstances, but to be really deliberate regardless of the circumstances. And that's what all this requires. And it's very different training, like Robert Kiyosaki says. It's very difficult when you get taught by people who only work for a living, aka teachers, who are rarely entrepreneurs, to learn how to become an entrepreneur.
Right. Yeah, and the fear thing, every single person who's done anything great faces fear. And just because they do stuff that everybody's afraid of does not mean that they don't feel the same fear. We try to get enough information to make the best decision and manage the risk as best as possible. But I guarantee you, everybody that's done anything great has had to face that fear. And most people, like you said, they just let the fear stop them from doing whatever it is. The fear of failure, fear of loss. So they don't do it, and they stay where they're at because they're too afraid to.
Yeah, and I think the fear of failure is even greater than the fear of loss. We are always, that's one of the reasons why athletes do well, right? Athletes are used to failing. Athletes never win all the games of a season. That virtually never happens. A great athlete, a great baseball player is one who has a 300 batting average. He's off the chart. That means he's missing 70% of the time. And, It really helps to demystify success when you know what that looks like. Whereas people who have never put themselves out there like that, be they in the money space or in the athletic space, they're just crippled.
Yeah, maybe that's where I get it is, growing up with the sports background and all that stuff. I was always taught, whatever you're afraid of, just go do it. It'll get less scary the more that you do it. But I guess I should get into some of the things to speed up the money before we run out of time. But like we said, a job will only get you so far because you're trading the hours for dollars. And then the stock market, that is still as much wealth can be created there or lost. It is still kind of slower. So one thing that I'd learned about years ago was options. And that's one thing that I teach is option trading, which scares the heck, talking about the fear, that scares the heck out of people a lot of times, because what most people have heard is you can make a lot of money fast or you can lose a lot of money fast. So it's basically gambling. And I hate when anybody describes any type of investing as gambling, or where they say, well, it's just a crapshoot. We'll see how. No, it's not. You can do things to get the information. Now, people who talk like that, they have no business investing because they are gambling. There's a huge difference. I can show somebody how to put together an option strategy and structure that to where there's little to no risk at all of losing money. And, we can have a defined upside, or, what most people, when they go to an options seminar, or they read a book, or they, whatever they first learn is, okay, I'm going to make a bet on one side or the other. This stock is going to go up by this much, or it's going to go down by this much. And they put their money down on that. That is the worst way to do trading options, because that's the highest risk of losing money. But I teach people strategies to where, Warren Buffett's rule number one, don't lose money. Rule number two, don't forget rule number one. So to me, finding ways to reduce or eliminate risk is the biggest thing, and then figuring out how to multiply things, because options, for a fraction of what you would buy actual stock for, you can control 10 times the amount. So that actually speeds stuff up, and you don't have to lever yourself up ridiculously to do that. Like I said, there's ways to structure things to where you're not betting the farm, so to speak, on one particular deal. And however you do structure it, you can potentially structure where you can make a really good return with little to no risk. Real estate's another one. Go ahead.
No, I was going to say, I was going to ask, go ahead and name the other ones. Real estate, obviously side gigs. Elaborate on both of those real quick. And probably what we're going to do is a pretty good introduction, panoramic overview. Be good for us to do a follow-up at some point on each one and go into some detail. But go ahead. Real estate is a good one.
Yeah, so, there's kind of a couple different ways of looking at it. For trades, it doesn't even have to be single family, but the thing that I think of the most is like flipping houses. That is not me. That I'm really not into that. I've got friends who make good money doing that. They're very good at it. That's not me. But whatever your investment style is, that's your style, and whatever you're comfortable with, what you like, what is the most important thing. Do something that you know. If you don't know what you're doing, then stay out of it, at least until you do know. So, and another good thing to mention is you mentioned mentors. If you don't know what you're doing, the best way to learn is to get a mentor and have them hold your hand along the way. Have somebody who can teach you how to invest in real estate correctly and how to avoid risk, how to price things, how to underwrite and estimate, the cost of a deal and what you should get out of it, your returns, and how to trade options. That is a very big deal where you need some mentorship, because somebody that jumps right in, they can do a lot of stupid stuff that I've seen for many, many times. But the flipping houses, that's a trading deal where you can do multiple flips and then hopefully take what you've made off of that and invest that into a longer term investment. I personally prefer multifamily stuff, even if it is something that I'm buying and then going to sell again within a few years, because there's less risk. Most people say it's a bigger number, so it's more risk, but no, not necessarily. If you have, let's say, if you get a single family home and one renter is not rented, you're paying the entire bill. If you got a duplex and one's not rented, you're still probably losing money. If you get a fourplex and one or two units aren't rented, then you still might be breaking even. But if you get 100 units, if you got 50% of it empty, that's not going to be good. But my point is, the more doors you have, the less risk there's going to be, and the greater you can increase the value of it as well.
Yeah, no question about it. Well, let's get into gigs in a future segment. We went really long. My fault, because I was into the conversation, particularly on the reasons why people don't succeed. But there's a lot of reason why, particularly in the real estate space, all things require mentorship, but particularly the real estate space. There's no area where you can really destroy yourself quicker than on-the-job training when it comes to being a real estate investor. There is really nothing that can do it quicker. So you need that kind of help. With your final thoughts, talk a little bit about mentorship. Obviously, hiring a professional like you that works with people, that makes a lot of sense, especially in the role you have with people. You have a vested interest in their success. But what are some other good ways of finding help? You can start with books. Books are good mentors. Go to places where some of these professionals are at. Make introductions, get to know people, be a friendly person. Get a relationship with somebody who knows this stuff. Do not be a parasite who only wants to suck information and value out of them. Like, what can you do to add value to them? I've even told people, hey, you know what? I would go work, if I was you, I would go work for this person for free just to learn what they learn. Tell them you will do whatever they want you to do if they will teach you. Most people don't like the word free, but like we touched on Rich Dad, Poor Dad earlier, Robert Kiyosaki, that book, I say it broke my brain after chapter 2 when his rich dad took his pay away and said, you're going to work for free now. That totally changed my mindset, and it changed my whole life. But I would definitely seek out mentors, whether they're paid, whether there's somebody that you have a relationship with that you don't have to pay, but whatever, mentorship, even paid mentorship is always worth the price of admission. And a couple things to keep in mind with any of these things is liquidity. Like, if you're trying to grow, speed up your wealth building, the velocity of your money working for you, is liquidity is a big thing. How liquid is it? Like, the one thing with NFTs is I'm not sure how liquid some of them are. You can buy them, but how quickly can you unload them? Real estate's a lot like that. It's less liquid, at least to an extent. You can always sell it as a really bargain deal on a fire sale, but the stock market, that's usually pretty liquid, and they're with options even, that's pretty liquid. But there are some there's less liquidity, and that also
makes you give up some profits when it comes time to sell in or close in a deal, because if the liquidity is lower, it's a little tougher to move in and out. Your time frame, how long are you willing to tie this up, and what's your risk tolerance? I mean, how much what is the risk tolerance you can actually, deal with? Are you betting your entire life savings on one particular deal? Well, that may not be really good, but just a few things to keep in mind. And they can always contact me. Go to chriskidd.com, because I know there's plenty of other questions. But
chriskidd, KIDD is how you spell that, .com. Chris, thanks so much as always. I think these kind of conversations are really helpful, inspirational and aspirational, and look forward to having more with you specifically on helping individuals really to navigate some dicey waters. I am Kevin Price. This is The Price of Business. More for you after this.